Stock market is so weak right now that a crappy social media app called Snapchat apparently can rock the entire thing by dropping 32% overnight. Wow. Snapchat. Who would have thought that Snapchat, maybe the most useless app this side of TikTok, could affect the entire stock market, but that's where we're at right now. Serious underlying weakness. But guys, we all want to know what the hell's going on with this market, and specifically what's going on with the crypto market. I have one of my favorite guests today, Daniel Jeffries, a futurist who has been all in cash since the 50Ks. What a legend. I can't say that I necessarily would say that any of us should have had the balls to do that or conviction, but we're going to talk about why he is still sitting 100% in cash and a lot of other things right now. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and take a pen, throw it up really high in the air and hope it lands on the like button. And also maybe in your eye. Don't do that. I'm going to get sued by someone who stabs themselves in the eye with a pen because they're dumb enough to actually try what I just said. Yeah, guys, I'm sorry I'm a few minutes late today. I know I'm usually like 3 minutes late, but I was 5 minutes late because I was having a chat with my accountant, because doing crypto taxes will take you the entire year, no matter how hard you try, right? I'm still in the midst of my taxes. It's May and seemingly feels like there's no end in sight because doing taxes sucks really bad. But you guys don't want to hear about that. How are you guys all doing today? Hope you're doing well. As I said, maybe we'll just dive right into it since I'm a little bit late. Dive right into it. I'm going to bring on my guest, Daniel Jeffries, right now. Listen, the topic of this, obviously, as I said, was, what do you do in a bear market? How do you survive? Well, this guy just sits in cash and waits for the perfect moment. Talk about how you had enough conviction to exit. Because, listen, most people's strategy is just hold through it, right? Hold through it. It'll come back. Wait, you actually exited and went to cash.
Yeah, look, I think HODL forever is a meme made up by good traders to take everyone's money. And I think the idea that you should just hold forever through anything, to me, is kind of nuts. And I know that's sort of not the way that most people think about it. But the problem is when you have a massive, crash, you have to go up by X, 100+%, to get back to that point, right? And so I'm not talking about day trading or coming in and out or even swing trading, but I mean, if you look at it, everyone always says zoom out, but I just don't know what charts they're looking at, right? In other words, like what I think most people are doing is they're not actually seeing anything with their eyes. What they're seeing is a projection of what's happening in their mind and what they believe. And I think that's true of most things in life. I think it's definitely true of trading. I mean, if you look at the trading tribes of one of those kind of legendary traders, most of it was sort of managing emotions and learning to see clearly, and nothing to do with actual trading techniques. And so if you go look at the weekly charts and you look at, a couple of basic indicators, you look at the Fisher transform, right? You look at the EMA 200 and the EMA 50, right? You look at the momentum indicator, from Lazy Bear on TradingView. The momentum indicator is pretty strong. So is the Fisher transform. You can look at it and somebody said the other day, Bitcoin's been more stable than the S&P, and I was like, I don't know what chart you're looking at, dude, but that's just fundamentally wrong, right? It's just it's been going down.
The S&P is down 20.
Right, and by the way, it's been going down since November of last year. So I don't know what chart you're freaking looking at, right? And but I think that's the problem, is that people. I remember when I first posted the chart back then saying, hey, I don't think this is just a little dip. And I remember somebody posted, oh, imagine posting every little dip that it's I'm like, I'm looking at this over like many, many weeks or months. And I rarely look at the daily. I don't look, anyone who looks at the 3 hours, I don't know why you're doing it. It's just a waste of time. But when you look at it on the large scale, it's a pretty consistently performing movement, and I think that's just sort of, you just have to have the courage to get out of it and then sit around for a while and then wait till it bottoms.
I think it begs two obvious questions, right? I'll give you the first one. If you go 100% to cash, what do you do with that cash? Is it completely in dollars? Are you sitting in stable coins earning a yield somewhere? Because obviously there's
No.
the downside of just being all in cash when inflation is high, although it's temporary.
Yeah, look, it's temporary. So look, I'm not totally in cash across all of my portfolio, just my crypto portfolio. Right. I mean, so I right. So I stay in other things, and that's pretty diversified, and it's always been diversified. Right. I would say crypto's only 20 to 30% of my portfolio at any given time. Right. And yeah, there's a downside to it. And people they love to talk about this in the space. Oh, there's inflation and you're losing. And I'm like, yeah, but you just lost 60 or 70% over the course of it, over a year. Like, I'm losing, a couple of percentage, but I'll take that. And it'll stabilize, right? I mean, it's the dollar and the euro and various other like government coins. Let's just be honest about it, are still the most stable thing on the planet. And as we saw with
certainly.
Right, like the algorithmic stable coin, which I still think, by the way, is a great idea. I just think the algorithms haven't been worked out yet, as we've seen recently with the crash down from like the dollar peg to like 1 cent or whatever in some of these stable coins. So I don't trust them.
Yeah, I think algorithmic stable coins are a cool idea, but we don't need them. Like at this point, why? It's just self-inflicted wounds. I think we could just move on with the dollar-backed stable coins. And yes, cool experiment. If it was like 100 million market cap and nobody was actually using it and putting their life savings in it to attempt to earn a 20% yield out of nowhere. So like I said, there were two questions, right? Is what do you do with the cash? Or what are you doing while you're in cash? So then two obviously begs the bigger question, which is when do you come out of that cash and back into the market? Obviously, you're a crypto believer. You want to be in this market. So what would be a signal for you that it would be time to re-enter?
Usually, if you look on the weekly chart and you pull up the EMA 200, which is a huge average, right? Over time, I put it in bright blue on all my charts. Usually, you'll find that the price action will kind of dip below that, usually with some kind of like sharp knife down at the last.
You had that
dregs.
Right. Here's the weekly EMA 200, right? And they're the red line right there. We actually that like you said, it's only the third time ever. And those two have been the bottom with piercing lines, obviously, in March of 2020. So yeah, it's an interesting idea. Sorry to interrupt.
No worries. But I mean, you go back even further, go back to 2017, 2018, go back, you'll see it'll dip like below that by a range, and then it'll kind of try to revert to that mean and sort of stabilize around it. And it's done that multiple times over the course of its history. In fact, most stocks will kind of do that at some point in time, unless there's some total devastation of the stock, right? If it's a scam or they're out of business or they got bought or, there can be real life sort of things that have happened. But when you look at
some things charts don't solve. Yes.
You're right. If you're Enron, it's still going to zero. Right. So in this case, though, like it tends to hit that EMA 200, and then it tends to kind of do this sort of range trading sort of sideways thing. In fact, the only thing that really threw me off in the last dip was the fact that it usually would give a little bit of bounce after it kind of comes down from its top dip, and then kind of like go into that bigger slide and then go into that range trading historically. But this time you had that moment where it literally bounced right back up and you had that double peak. That really threw me off. Honestly, I was fighting that the whole time. So lest I pretended I have everything, perfectly locked down, I missed most of that second bounce. And I'm okay with it, but it sucked, right? You would want to catch that, but it felt like, why are we going immediately right back up in this V? And I think that the hopium was just so strong at that point, and everything else was just ripping. You have all kinds of stimulus in the economy. You got this everything bubble that's been happening for forever. But I mean, look, the larger economy is a big problem right now. It's a big problem right now. Not only do you have a war, right, that's putting pressure on food prices. I mean, you could have famine. The Economist just had an article on that with like skulls in the wheat.
I think it's funny though. Every time the Economist or any like major publication like that finally says that we're all going to die of food shortages, it's been like the historical bottom of every stock market.
Yeah, sure, right. Yeah, you look at these things, right? But look, the war's not over, and the Ukraine provides something like 10 to 15% of like world calories in terms of wheat, right? So it may not affect you and me, but it's certainly going to affect a lot of people who depend on that on a daily basis. In the same way that when gas prices go up, I mean, I was just talking to my sister, and she's a teacher, right? And she was saying it's cost $100 to fill her car, in New Jersey. That hurts, right? That hurts when you're when you're living paycheck to paycheck, and it hurts everybody, right? So the economy is in a nasty place. We had essentially, a plague. We've got a war now, right? The war could expand, right? And we had a 13-year bubble, where you put in a ton of stimulus. If you look at it historically, right? I think Ray Dalio's got that in his Changing World Order book. He looked at it over 500-600 years, right? Where you put a bunch of stimulus in, and then people spend it on stocks, right? And now we're seeing a recession in all the tech stocks that everybody bet on, right? Because now the stimulus is gone, right? And they're going to have to tighten rates, and you get kind of a downturn. These things, I think the crypto market is now totally correlated to the wider market. It used to function completely
for this moment,
independently.
it absolutely is. Yeah.
It used to function totally independently as a unique new thing, but I don't think that it functions any differently than the regular market at this point.
Yeah, I mean, I agree that everything, I mean, historically, whenever things go risk off, correlations all go to 1. You just need to wait until that ends. And listen, I'm assuming you're looking to get back into the crypto market. Like I said, I know your opinion on it for the future, of course. And last time we did this in March of 2020, Bitcoin went up 17 times and the stock market doubled, right? So we know what's going to happen when they do decorrelate. We know what is going to happen. I think you have to have a lot of confidence to go 100% to cash. Obviously, it's not what I do. I mean, I'm here every single day. I don't really care what the price is today. I'm waiting 20 years, and I'm willing to keep buying in these dips. I think your average person can't just go all in. Well, also depends on where you live and your taxes, but going all into cash and then buying back in is very difficult. So, I mean, are you looking for a flip of, is there a certain level you're looking for or a certain signal that would give you the confidence? Is it like inflation coming down? Is it the hike stop? Like all of a sudden the Fed says, "Oh, it's election time. Let's do a little more stimulus."
I mean, look, the Fisher transform on the weekly is probably going to hit the bottom in 2 months if you look at it where it's at, right? And that tends to be the first sort of reversal of the price. It'll have plunged below the MA200, and then it'll kind of be moving along it on a range trade. I would say normally I would probably be thinking about it at the point when everybody stops talking about crypto and crypto's boring, when it comes out of the news from like various angry, old world folks who are like, I hate this thing. It's evil. We've got to destroy it. When they start focusing on their rage on other things, and it's really not in the newspapers anymore, right? And it's going sideways for a while is typically when I start looking at it. And I do start to look at it when like all of those EMAs, right? Like when the 50 and the 100, everything start pushing back up through it, the Fisher transform starts moving up. I like when all the charts are sort of moving in sync. Like if I look at the daily, the weekly, the monthly, they all start kind of moving in the same kind of direction after a long push. I like that. I'm fine to wait for the initial bump too. Right? In other words, like my general strategy with trading,
you don't need to catch the dead bottom, right? Obviously.
No, if you want to catch the dead bottom, there are strategists who've done this. It's just you're going to have to get in 4 or 5 times. And that's how they magically catch the bottom, because they're immediately willing to go out if they're wrong.
Right. Yeah.
Right. And if you look at you look at sort of legendary traders who've done this, they're like, okay, I'm wrong. Okay, out. Okay, done, out. Okay, done. Okay, great. I got it. So that's how you catch a turn. But otherwise, I'm sort of like, come to the party a little bit late when everybody's already dancing. Right. And like drink all the booze and then like leave before, and let everyone else clean it up. Right. That's generally my trading strategy. Right. That's why I guess
here's the next question then. If you were not in cash now, what would you do? If you had held it down to this point, would you be looking to raise cash, or would you just be holding tight at this point because you know that inevitably a reversal is coming?
No, I mean, if I had failed to get out, right, I'm not going to sell it at a bottom. That's ridiculous, right?
Okay, so you do think we are bottoming?
Yeah, right, exactly. Like, or I'm not just going to sell out in the middle of like after I've taken a 60 or 70% loss. That's crazy. And I mean, you've seen that, right? But again, like at some point though, if you miss the kind of initial down push, there's still a reason to get out, right? And a lot of people are like, oh well, now it's already down. I'm just going to hang around for it to turn around. It's like that market cycle thing where it's always like, well, these are all good stocks. Like they're all going to come
all
back.
the bull traps, all the big bounces, all the dead cat bounces are excuses. Right.
And that market psychology plays out again and again with like absolute precision for hundreds of years. Right. It doesn't matter what you're trading. Right. And so look, I love it. I mean, am I going to get back in? Sure. I mean, I'm probably going to go like I do every time. I go back into the big boys. I go back into Bitcoin and Ethereum, and there's a few of those, right? Like I don't. Those are always the leaders anyway, and they're the leading indicators. And then I start playing around with secondary coins and coins that have a chance to do something crazy a little bit later after I've kind of piled into those, right? And they tend to follow after that. But after a big drop, right? If there's kind of like a big run or just a little bit of drop, then the alts can be doing all kinds of crazy fun stuff. But after a big drop like this, where everything bottoms and every chart looks exactly the same, there's no point in going into alts first. It doesn't make any sense.
Yeah, I mean, it's very hard. Like, it's very hard to find a single altcoin chart that looks different than any other altcoin chart.
They all look like the exact same chart.
I mean, you have to just which is still, it's kind of sucks that we're still in the environment where the macro move or the Bitcoin move wrecks alts so bad. But I mean, we are in sort of a uniquely situation where everything, I think, is risk off. And of course, altcoins are going to move first. But I agree with you. Like, you come into the large caps, when you see the strength, the time to be in altcoins, everyone loves to say you just want to trade altcoins when Bitcoin's sideways. Well, Bitcoin's sideways now, but it's sideways at a bottom with people thinking it's going to go lower. That's not what you want to be in. You want to be in altcoins when Bitcoin goes up and then goes sideways, and there's confidence there'll be another move up, right?
Yeah. Look, and this stuff all stays correlated until all the stuff we've talked about in the past, right? The cryptocurrencies have to have a larger purpose and a bigger economic system that they're attached to that's totally unique, right? For them to not function like a completely speculative asset. And the government loves to use that. It's speculative. Look, almost everything's speculative. But if you're speculating on Apple, right, then you're speculating on the historical performance of something that's produced something in the real world. If you are speculating on cryptocurrencies, you're still speculating on hopium. I thought we'd be further along with this, quite frankly. I thought we would be 11, 12 years into this, I thought we would be further. I've tempered when I look at my futurism, I know I'm almost always wrong on the time frame. So whatever I think, I just triple it at this point in terms of, so like maybe it's 20 years, right? Maybe it's 30 years. So NFTs started to do some interesting stuff, but mostly it's like, cartoon apes or like, some gal on Instagram, like making her like stupid coin or, her NFT that somebody on OnlyFans is buying, right?
Yeah, that was
right. Like it, but when you start having, when you start having collectibles market, which is $300 billion market, like really tied to this, right? And there were a lot of investors from the Topps trading cards and the basketball, National Basketball Association, all this started to look at these kinds of things because they understand that market. That makes sense. A lot of the art players, were looking at these markets as something interesting. A lot of independent artists were looking at it. So I thought we saw like the inkling of like a thing, but it's almost like when graphene comes out and they're like, well, graphene's going to do like 800 things. And you're like, oh, that's awesome. Like, what's it doing now? Well, we haven't deployed it anywhere. Okay, well, cool. Well, tell me when you do. So like, again, like the economists talk about, well, now they're talking about putting it in cement. That might be the actual first killer app and a totally unexpected one. It makes it 30%. Just putting a tiny percentage of graphene into the cement might make it 30% harder, which means you need less, which means we're wasting less of the environment. That could be an awesome thing. It might take 10 years to deploy. That was unexpected in terms of graphene. And probably 20 or 30 years down the line, some future Bell Labs will find a thing of graphene that we never expected, right? Some crazy new version of the transistor or something we can't even perceive of. But that's the problem with, I think, with crypto right now still, and everyone hates to admit it, it's still not doing anything except sort of flipping cartoon monkeys and us trading in circles, right? And so it's got to get to a point where it's indispensable to the economy and it's providing new value, whether that's like actual loans or whether that's like fractional ownership of all these things we've talked about in the past, and it's still not there. That's the unfortunate part.
My dad, I was literally trying to look it up as we're talking. My dad literally just texted me like 5 seconds in, and I didn't read the article yet, but the Washington Post, crypto is a solution in search of a problem, which was an article that he literally sent it to me like as I was going live and I was trying to look to see exactly what it said. That sounds like that's sort of what you're saying. Is right. Yeah, it'll be a solution to a lot of things, but maybe the problem isn't there yet.
There are problems that it solves, but it's problems that necessarily the powers that be don't want it to solve. Like I had to, so I was living in Germany last year, and I had to pay my taxes there, and just kind of transferring money from, so like taking out of my trading platform to pay the crypto taxes into a normal bank, transferring it over to a German bank account so that I could transfer it to the German government was anywhere from 6 to 4 different steps with like a bunch of fees. And the idea that I could have potentially just been like, zap, put it over here and send it somewhere in a very frictionless way, I think is actually a real problem. I think most people don't notice it if they have a single bank account.
I was just, yeah.
I know you and I agree on this, right? But it's like, from my standpoint, I think there are problems that could solve now, and I think there are problems that could solve a lot later, right? I think powers that be have a vested interest in not allowing kind of frictionless, fluid payments, right? And not allowing the money to kind of flow freely around. They want those checks and balances. They want to find a way to like keep it from flowing. They want it to flow through a bank account so they can kind of like freeze it if they don't agree with you, or like lock you out of things. And I think that's going to be a big fight, I think, in the coming years. But it's still got to have more utility, and it's got to be frankly, it's just got to be too big to fail. It's got to be one of these things that if you penalize it, it kind of hits you the same way China stupidly hit their tech economy right before all this happened. They're like, oh, well, we've got it now. We're locked in. We're about to be the biggest economy in the world. We're awesome. And let's just go attack the tech companies and shave $2 trillion off their thing, because like we don't want them to have power. Oh, oops, we just tanked the whole economy, and like now the properties bubbles. And then now they're going to the tech companies going, well, can you please, stimulate the economy? You mean after you just beat us up, right? So, but you have to be so big that it hurts the government or hurts a giant organization to come after you, and it has to bite back. But we're not there yet. If you went and smashed the market right now, or you penalized everyone that had a private wallet or whatever, the fact is, like, it would only hurt a small subset of folks. But it's got to get to the point where it's an indispensable part of the economy.
Big to fail. I get it. Right. First they ignore you, then they laugh at you, then they fight you, then you win. Well, they're fighting us, so we'll see if we can win.
That's right. That's right.
But guys, I know I taken up a lot of your time. I love having, because I obviously respect your opinion. You've been here a lot of times. I don't think I would have had the balls or conviction to do it. I know that I wouldn't have, because I didn't, but I respect that you have, and that you have a different strategy, and that everybody finds their own way through this market. I'm actually impressed that, like, when it smashed down to like 25.5 and you were like, well, I could have twice as much crypto now that I did when I exited, or even more, that you didn't start buying. So it's quite a bit of conviction. Now I'm expecting you to be on speed dial for you to tell me when you start buying again.
I'm always transparent about it. The funniest thing is I post it everywhere, and just nobody listens. They just don't, like they just it
violates our emotional sensibilities, my friend. Well, thank you, Dan. And wait, where can people find you on Twitter? Is it? I know I posted it, but it's
Dan_Jeffries 1. Again, we don't miss the 1, or you'll be looking at the asexual reproduction of tree frogs. Remember that. And
nice. Let's do that.
Yeah, there's a Dan Jeffries is a master of the study,
biologist or something, right?
Yeah. But Dan Jeffries 1, Dan_Jeffries 1, you'll find me.
I'm also interested in tree frogs, though. Thank you, Dan. Appreciate it, man. And we'll have you back soon to discuss again. Thank you, man.
Thanks, man.
Bye.
Have a good one. Bye.
Hey guys, I forgot in my excitement to talk to Dan and being late with the accountant that, of course, Vauld. You guys still speaking of being in cash, right? All the cash that I have is sitting largely in places like Vauld, earning 12.68% yield, which is incredible. And listen, I believe that these platforms, we discussed this yesterday, will continue to be able to offer yields. But it's impressive, of course, when some of them have continued to do it while others have not. You also get a 40% reduction in fees. You can automatically buy the dip there. I know a lot of you guys have checked it out, and I appreciate that, and have heard a lot of very, very positive feedback. I see you guys saying, damn, Bitcoin died again. I haven't even looked at it. 28,885. All right, let's dig into the rest of the stuff we got here today. Like I said, Snap dives 32%, and it's dragging other stocks down with it. I loved the funniest part to me. I don't have it exactly, but the CEO, like when talking about the Snapchat earnings, he blamed supply chain issues, inflation, and Fed tightening. To which I thought, what the fuck does any of that have to do with Snapchat? Maybe people just don't like your app. I don't know. But I'm just saying, I guess that affects the advertising budgets, which is what he's saying. But are we really to the point where like Snapchat is affected by supply chain? Right? Basically, they're saying that nobody has money and they can't advertise. That's what I'm assuming is happening here. But guys, this is nuts, right? It's like, hey guys, Bitcoin's too volatile to get an ETF. Snapchat, hold my beer, right? This is the Snap chart. Just last September, not even a year ago, we're trading at $83. It's $13.62 right now. You might notice this small gap right here today. That's the 32 now more percent drop in about 5 minutes after earnings overnight. Look at it. Admire it. What do you think? Crazy. Crazy. Snapchat. First of all, Snapchat should not be a publicly traded company. It should be taken out behind the barn and shot like whatever his face Kevin O'Leary always says. No, I mean, I'm sure Snapchat's fine. But does anybody use Snapchat? Hasn't it been rated by TikTok? Hasn't it been replaced by the urology app TikTok? That was a dick joke. It should be, right? And TikTok, isn't TikTok just the Chinese spying on us or something? I don't know, dude. Give it up. Like, who cares about Snapchat? But the problem is it's literally dragging other things down. Like, oh, now Facebook has to get wrecked because Snapchat? Oh, some of your kids still use Snapchat. I guess chat. Remember when Snapchat was just like, remember Vines on Twitter? Oh, yeah, long snap. That gap should fill eventually. I have to agree with that. But yeah, whatever, man. Whatever. So Snapchat dragged things down. Here's SPY. Down a little bit today. Actually, it closed at 396, down to 390. Stock market continuing extreme volatility. What are you going to do? And obviously, when we see that happening, yeah, Bitcoin went down after Snapchat earnings. Do I really have to listen to people on TV tell me how Bitcoin is affected by Snapchat? Stop. Kill us now. When can we get our sweet, beloved Bitcoin back? So here's an interesting one. Wall Street says a Fed digital dollar spells destruction for banks. Yeah. This is the current research overwhelmingly undermines the purported benefits of a CBDC and instead indicates that a CBDC would seriously disrupt the financial system, significantly harming consumers and businesses, said Greg Baer, who runs one of Wall Street's lobbying firms in Washington, the Bank Policy Institute. So a guy whose job is to lobby for big banks, not at all biased, says that a central bank digital currency would fuck up banks because, I don't know, people could transact directly with the government and wouldn't need banks. So now let's take the jump past the CBDC. And we now have a very, very clear opinion from Wall Street and their banks and their lobbyists on what they really think about crypto without actually having to say it, right? Because we all know that central bank digital currencies are hot trash that's thrown in the dumpster's lit on fire. Then you throw in Snapchat and whatever else you can get in there, get that shit really blazing. Right? A central bank digital currency in the United States would be an absolute dumpster fire because you'd have no privacy. They could just airdrop some stimulus, reverse airdrop your taxes right out of there. Gross, right? But if the banks are threatened by a central bank digital currency, imagine what they really think about Bitcoin and other cryptocurrencies, of course. Moving on, a Fed survey. Oh my God, I can't get it with the consensus. I'll be a consensus. We're getting all their ads here. Fed survey, 12% of adults held crypto in 2021. Seems low. It marks crypto's first appearance in the central bank economic well-being of U.S. households. Spoiler, well-being is not too good in U.S. households. Not too good. But they said that basically they survey 11,000 people do this, and they said 11 people held cryptocurrency as an investment, but only 3% said that they'd actually used it. I think it's higher than this, to be quite frank, but this is officially from the Fed. This is a good one. Guggenheim CIO Scott Minerd is back with another Bitcoin price prediction. In December 2020, he said Bitcoin should be worth about $400,000. Now he says 8,000. I got the video. I haven't watched it yet, so let's write it. watch
about the world of
whatever I just
crypto. By the way, I don't know if we can get the camera's not going to see it. The blockchain house is here.
Right.
Every crypto person is in town here in Davos.
Right.
And we've watched it obviously tank. It's not clearly a hedge on inflation, at least thus far.
Right.
But do you see that as the tail? Do you see that as the dog? What's going on there?
I think it's more of a symptom. It's telling you, it's like the canary in the coal mine, right? We're seeing crypto collapse the way it is. I think it's got more downside to it.
More downside.
More downside.
How much more?
Well, when I look at Bitcoin, which the technicals have been better than anything else, when we break, below 30,000 consistently, 8,000 is the ultimate bottom. So I think we've got a lot more room to the downside especially with the Fed being restrictive. And let's face it, most of these currencies they're not currencies, right? They're junk, right? I mean, the majority of crypto is garbage. So there are going to be survivors, but, and crypto is the future.
There's hundreds of cryptocurrencies.
19,000.
But do you think
only
that
19,000
Bitcoin is junk? Do you think that ETH is junk? Do you think Solana is junk? How do you?
I think Ethereum, I think Bitcoin will be survivors.
And survivors at one day at 100,000, 200,000, 500,000 in the sort of Kathy Woods world, or something else?
Yeah, it could be, but I don't think we've seen the dominant player in crypto yet. Right? This is like the internet bubble, right? If we were sitting here in the internet bubble, we would be talking about how Yahoo and America Online were the great winners, and everything else. We couldn't tell you if Amazon or Pets.com was going to be the winner, right? But of course, Yahoo, Google, we didn't have Google yet.
Right.
America Online, the dial-up service died. So, we don't know these. I don't think we have had the right prototype yet for crypto. And let me tell you what that's based on, right? The definition of currency is that it's a store of value, it's a medium of exchange, and it's a unit of account. None of these things pass. They don't even pass on one basis.
But if they don't pass now, why would they pass later?
Because technology will come along, and there will be a point where if you can create an ecosystem, then where we can actually use these things for transactional purposes and people feel comfortable, they hold their value.
Right.
Stablecoin's an interesting attempt at that, but candidly, if we're going to exchange it at a set exchange rate like a currency board like the Hong Kong Monetary Authority, right, then it's going to get regulated like currency.
Sorry, I had to make you watch the whole thing. This guy thought Bitcoin was going to $400,000. Now, the part that really struck me, I'm not saying that it can't go down, but if it trades below 30, it has to go to 8. What about all those numbers between? There's a lot of numbers between 8 and 30 last time I checked. Why 8? Oh, God, I share a name with this guy. Sad for Scots all around the world. Listen, I'm not saying there can't be more downside, and I'm not saying that I disagree. I'm curious what your guys' thoughts are here. But there's so many numbers between 8 and 30. Just choose a different one. 20, 25, 8. We're like back to being like, in second grade. 8. 18. That's in there, right? 20. So depressing. But listen, I think that is I think he has a fundamental misunderstanding of the comparison between this and the internet bubble if he thinks that Bitcoin is AOL or pets.com or whatever stupid example he gave. It's not the same thing. Also, once again, we're looking at all of this through the lens of a rich and privileged American white dude, right? All of those things that he said it is not is true maybe in the United States, but not true anywhere else in the world where we have, I don't know, hyperinflation and people don't have access to banks and people can't transact in their local currency and they can't get dollars and they can't. Yeah, exactly, Jeff. This dude is buying. Why do we even bother with uninformed people? He's not uninformed. And these voices matter right now, unfortunately. But I don't know, man. Yeah, you, Scott Minard, multi-billionaire, do not need Bitcoin. I agree with you. But maybe try to, be a little less smug and look at the fact that other people in the world might. Wow, man. I hadn't watched that video yet. I hadn't had time, but woo. Yikes. FTX has held acquisition talks with Webull, Apex, Public.com report. Bottom line, FTX is coming into the stonks, right? FTX US already launched some stonk trading, said they're going to lose money on the stonks because they're offering zero commission trades. You can basically pay for it with their crypto billions because they just keep raking it in on the crypto side. But yeah, man, FTX is going to dominate the whole planet of all trading, and we're just going to take it. But yeah, they're coming in hard right now with the stonks. They're buying everybody out here. Hide your wife, hide your kids. FTX is acquiring everybody out here, right? Hide your wife. Anyway, so yeah, FTX coming in hard. So Coinbase becomes the first crypto company to enter the Fortune 500. Awesome, right? They didn't just get in the 500. They came at 437. This is the 500 largest corporations by revenue in the United States, right? We had Tom Dunleavy on from Asari last week. He was like, Coinbase is dumping, but they have $6 billion in cash, only $3 billion total in debt. So they could just pay that off and it would be a rounding error. Oh, the ads. And they're making over $1 billion a year in revenue. It's a great company. Great company. Great company. I mean, you can tell just by looking at the chart, like, oh my God. So bad. Like I said yesterday, the newsletter, pennants generally become flags. Pennants suck, bull pennants. So now I'll be looking for something like this in the exact same setup. But yeah, I mean, Coinbase, if Bitcoin does bad and stonks do bad, Coinbase is both like Bitcoin and a stonk. Yeah. Listen, I don't know what you guys are talking about here, but like Warren Buffett is buying the shit out of everything, right? He waited a really long time. So yeah, Coinbase stocks looks bad, but it's actually a very good company that's making a ton of money. If you have any belief that Bitcoin is going to succeed in the future, I don't know, money's good. I like it. So I'm going to keep buying this stupid thing until I'm dead. Let's look at Bitcoin. 28,750. Are you kidding me? Yeah, Bitcoin looks crappy. 8 weeks in a row. This will be the 9th week in a row. This completely failed, so that's bad. I would say that we have, if we're looking at the daily, I would say that we clearly have some sort of support through this area right here. Oh yeah, look at that. Yeah, but I would say honestly, you gotta pull it to this one, something like that. Oh, that's not it. Right here, 28.5. Maybe stop there. We're getting more potential bullish divergence if this goes up. Actually, even if this doesn't go up, because we're still making a higher low in RSI even down here. So any curve here would eventually invalidate these. Bottom line, guys, I mean, what are we even looking at charts for? It doesn't matter. I want to stop looking at charts, but nobody allows me. I'm not allowed to stop looking at charts because it's my thing and I have to post them. But like, we just got to wait until this is better, you know? 28.6 is support. Listen, on Coinbase or Bitstamp, one of them's 28.8, one of them's 28.6. And that is the low from June 2021. That's the line that matters. Dude, there's CME gaps in both directions. Let's pull it up. I remember I haven't looked at it. I looked at it. I haven't really like studied it, but I know that I have some old CME shit here. Let's see. Here's CME gaps. Okay. Yeah, here's 126. Has not been completely filled. We got down to 25.4. It would be completely filled at 24.7. Yeah, then I don't see a gap at 21. That's not a gap because there's a wick through it. There's a gap at like 19, but also, guys, if we're being honest with ourselves now, got a gap here, right? I need to make that light blue or it's going to drive me nuts. I don't even know which light blue it is, but kind of like that, right? So we have a gap above too. But yeah, there's CME gaps all over the damn place. You get a CME gap. There's CME gap down here. Never filled 11. One down here that was never filled at 9,000. Any more gaps you got for me down here? I think there was one in the 3,000 somewhere, if I recall, but no, that seems to be gone. I don't see any more gaps at the moment that haven't been filled. Some of these have almost been filled. Yeah, there's gaps all over the place. I don't think that we need to fill them all. There happens to be a gap right here. Isn't there? No, Wix filled it. No gap. Like this one's filled. Yeah, there's a massive gap right here, 35,000. So yeah, go up. Is there one at 52? I got to look. I don't call that a gap because I think Wix fill gaps as part of the price action. So I don't call that a gap. Gap teeth in your mouth. Dr. Dre used to say. Why do CME gaps matter? Well, here's a funny secret. They don't. But if they did, the idea is that nature abhors a vacuum. When there's a gap on a chart, eventually the chart gods say, fill that gap. All gaps are not created equal. I actually wrote an article on it. 1 second. Gaps, Scott Melker. Cointelegraph, quite a while ago. Here, you can look it up. Just look up gaps, Scott Melker, and I'll break it all down for you. It's right here. I wrote this in, I don't know, 2019, January 2020. Right? And everyone's talking about CME gaps, but all gaps not created. I said the same thing right there that I did, but there's breakaway gaps, common gaps, exhaustion gaps, measuring gaps. I even made a chart of the different kind of gaps. Right? Explaining gaps. But the idea is basically that it's an area of price action that needs to be filled. But what's interesting and unique in this market is that Bitcoin trades 24/7. CME does not. So, of course, you get gaps on weekends when the CME is not trading and Bitcoin is, right? It's a meme. It's a meme. Hopefully, Crown will be on soon. He had some sort of emergency like 2 minutes before yesterday. So, yeah. Tooth gap. As Dr. Dre said, gap teeth in your mouth so much. It's got to fit with on your tonsils while you're on stage rapping at your whack ass concert. Show you how Death Row pull off that hoot ride. Hoot ride. Now you might not understand me, but I'm gonna rob you in Compton and blast you with Miami. Yeah, I don't know, man. We're gonna hit 9 weeks of red. I don't know, man. Seems like we could. I mean, it feels like odds are for it, right? We need to close above like 30,300. Anyways, guys, that's all I got for you today. I have places to go and people to do and things to talk about. But meanwhile, check out Vauld. They're right down there. It's literally right there. Oh, and of course, guys, the BitGet giveaway. Go to my newsletter, click on it down below, deposit $50 on BitGet. Don't need to trade, don't need to use leverage, don't need to do anything. And every Friday, if you just deposit that week, they'll give you $50. 53 bucks. That's all I got for you guys. I do appreciate you oh so very much. Sorry I was late today. Not really. Bye.
That's dope.